Hi, Mark Yegi here, and I'm recording this video to speak directly to people who are invested in Tesla. And I can tell you that it's been a tough time in Tesla, right? There's been a lot of bad news on the stock. And what I'm going to do in this video, I'm going to compare it to a lot of super stocks like Apple and Amazon and a few others, and kind of show you that with Tesla, if you stood strong through the bad news, you would have been okay compared to selling when the bad news is the loudest, which I kind of feel like it is right now. And so I'm going to be talking about the relative areas of Tesla's business and giving my opinion on those areas. And I'm going to have the timestamps listed below. So if you want to go to the Cybertruck, you can go right to that timestamp and just listen to what I have to say about the Cybertruck, for example, because it's going to be a long video. But I think I'm being fairly thorough in my research on this. I just will say this. I know that it's a difficult time to be a Tesla investor right now. I know it. The stock is down from, the low 400s all the way down to the 150s. I mean, that's a significant drop in a couple of years. And there's a lot of bad news surrounding it. But if you remember in 2022, it was the same story. Tons of bad news until Tesla made a bottom and it rebounded incredibly off the bottom. So that's what this video is about. Here we go. Let me just kind of let you borrow my certainty about why I think this. And I've been involved in the market, as you know, for 4 plus almost 5 decades. And I've seen this story before, right? I've seen it in Apple, I've seen it in Amazon, I've seen it in Google. But I don't believe in a kind of company that is one of those fly-by-night companies. I think we're in a company that's here to stay. And it's got no debt, and they've got a good CEO that's doing amazing things on the earth. And I just think that we are in this period of uncertainty right now, and we have to kind of go through it. Once we go through it, I believe that the story on the other end is absolutely amazing. But it's because I've been through this so many times that you kind of have to believe me on it rather than look at the numbers. So let's go through why I believe this so you can understand my perspective on it. And maybe you can borrow my certainty on it, or at least understand my thinking, right? Obviously, I would have preferred to have been in a much different place, but here we are. And let me just start by saying a lot of times in my career, I've been early. And early is not fun because you think you're right, you're right, but the market's not proving you're right. And the stock market, or the stock and the price of the stock, are different from what the company is doing sometimes until they come back together. And then when they come back together, then sometimes it goes the other way. And then the price of the stock outstrips what the company is doing. I'm using that to kind of lay the groundwork. I had a few years. I'm just going to go back over a few things over the past few years so that you get an idea of what some of the FUD, the fear, uncertainty, and doubt has been in some of these other stocks, that if you had just sat through them during that period of time, on the other end, it always worked out. And so I'm just going to go back through a few charts for you. This might be boring, might not, but I want to give you the idea of what we're doing. So hopefully this is good. So in Apple in 2012, I basically rode that Apple up from the low 600s to 700 before it split. I think it was a 7-for-1 split at the time. And so I didn't catch the absolute bottom and I didn't catch the absolute top, but in there you could see on either side of it was some downs, right? And so but that was a pretty good year, 2012. And I remember catching some of that. And I was pretty happy that we caught some of that. And that was good. All right. 2014 in Meta, which is, now Meta, but it was back then, it was Facebook. And this, if you look at the left side of the chart, Meta is about $34. I think it went public right around then. I held it from public all the way down to like 17 or something like that. And everybody said, there's no way that Facebook is going to make it. Now we look back and we laugh at that, right? But no way Facebook is going to make it because they don't have a mobile app. And all of a sudden they came out with a mobile app, and you can see between the two red circles on the chart, it's approximately where I bought and sold, had a pretty good year in Facebook. So it doesn't take much. It takes 1 or 2 stocks to make your year. And in this case, Facebook was 2014. 2017 in Alibaba, and Alibaba cut both ways, but you could see Alibaba, I rode from about 170 to, well, it's off the chart on this year, but it went to like 200, 210, something like that. Pretty good year. And then Visa, we went from, I think we went from about 100, that green circle all the way on the left side. It was a breakout right around 100, might have been 96, but it was 100, and we rode it all the way up. And of course, there was a huge correction in there, which scared out a lot of people. I hung in there, sold some of it at 125, and I think sold some of it in the low 130s. And then, of course, Visa is way higher now, right? All of these stocks are way higher now. So Microsoft in 2019, I caught at the breakout of 107, 108, somewhere in there, rode it up until about 130, somewhere in that area. But that's, that's a pretty good year, and Microsoft didn't hurt us. Tesla, 2020. I started getting back into Tesla. I'd had a couple of dances with Tesla over the years, and I got back into Tesla around this $340, $350 level. And it went to 502.49. You could see that go up to that. And then it, tried to get rid of some of the weak people in it. And then you had to hold it for a while. And then all of a sudden it shot up, right? It wasn't too much higher from where I bought it for a long period of time. And then it shot up. And in 2020, we had a pretty good year. And you could see this is the end of the year. We're still holding it, right? All the way up for past 600, about $700. Going to 2021, we're still holding it there, and it goes all the way up to 900. Now, it went down precipitously from the beginning of 2021. Look at that, from 900 all the way down to this $700 period. And I think I sold right in there. And it seems like I was glad I did. I sold it in March. It was somewhere in there. And, then I missed the stock jumping up to 780. Doesn't look like a lot on this chart, but it was a lot. And I was like, oh man, if I get another chance to get in, I'm going to do it. And it dropped incredibly. And then I got in around that green, and that green circle there. So that was just above $600. Well, look at what it did toward the end of the year. It went to $1,200. There's a school of thought that says you got to get out of stocks and preserve your capital and, put stop losses in. But when you do that, you don't really know when to get back in. And then when it's time to get back in, sometimes you miss those big runs. And so had I not gotten back in, I wish I hadn't gotten out, frankly, but had I not gotten back in, I would have missed that doubling of the stock price. And so in that moment of time, I said, listen, I believe in the stock. I'm going to buckle down doing a lot of research, and I'm going to own this stock for a long period of time until a lot of stuff changes and they're no longer viable. And I believe that they would be viable, and here they are. And so we're still holding it after that period, right? From 600 all the way up. And now you can see that the next year it was, it did a split and then it became choppy. And, this was all during, I believe this is 2022. And you could see it had big periods of down followed by big periods of up, and then big periods of down followed by big period. It's a typical stock. It just does it more than the others because there's so many things that this company is doing properly and a few things that it's doing incorrectly. And Elon Musk, because he's the richest man in the world, or was for a couple of years, brings a lot of news on himself. He's bought Twitter. He's putting rockets into space. There's always news around him, and so that creates the volatility, which creates opportunity also because we create income from our shares. So you could see 2022 was not a good year for anybody in almost anything, and Tesla was no different. So that was a pretty big decline from 400 to 100. We could have gotten out of at the bottom when all this bad news was going on at 100, and everybody said, oh, it's going to go to 40 or 50. And I kind of had already made that decision we were going to stay in there. So 2022 was a really bad year, as you may know. Then 2023, look, it's like the opposite of that year, right? Went from $100 down at the bottom, and it had big periods of uptrend, right? A few down as well, just like a typical stock. And, and then here we are. So if you look back and zoom out of Tesla, and you can just kind of look at the monthly chart from 2010, the stock's been around for 14 years. I want you to just notice the pattern of the chart. It's flat, and then huge up, and then flat, and then huge up. And there's some down in there too, as it tries to figure out, who to get rid of and who wants to buy it. And right now we're at the end of this chart where it's fairly flat. I mean, it doesn't feel like it if you're in it. It's in this flat part. Now, will it shoot up? I believe it will. Let me show you how. I also want to show you what Apple did. So if you had owned Apple, if you zoomed out to 2002, 22 years ago, you would have seen there are several periods. And now this is a logarithmic chart, so it's hard to see the big downs on Apple, but there are some that are obvious and they're marked on the screen. Amazon, look at those, right? I bet you all of us wish we'd owned Amazon and just held on to it. for all these years, but you would have had to hold on to it through some of these periods of time where they weren't making any profit and they were reinvesting money into their company, and everybody said, oh, they're going to go out of business, and Bezos is greedy and he doesn't know what he's doing, he's overexpanded. But if you look at Amazon, this has just been in the last couple of years, and Amazon has had a big down. And if you had held during that big down, it's basically back up to where it started the big down. So I'm giving you perspective on some of the other stocks that are out there so that you can understand my perspective on Tesla. So the bottom line is patience is the answer with Tesla, and it's the answer with all of these really good, what I call super stocks. And so now I want to talk a bit about Tesla. So let's talk about it. They have basically 4 models of car. They have the Model S, the Model 3, the Model X, and the Model Y. And I don't want to spend too much time on these because this could go on forever, but you'll see that if you look at the different sales, that's the kind of chart you want in any company, right, that you own. And so Tesla is producing lots of cars, and it's continuing to build and build and build cars. Now, maybe it's because it's gotten so big, it's not going to be able to produce the kind of growth percentage-wise, but it's still producing more and more and more cars every year. And that still remains true. And they're almost at 2 million cars a year now and expected to make 2 million cars this year. We'll see if they can hit that, but they might miss it and do 1.7 million cars. That's still a lot more cars than they did last year, and way more cars than they did the year before. So I find it interesting that the stock is down so much. It's down so much in the fact that this is the Model Y, the number 1 best-selling car in the world. The number 1 best-selling car in the world. That's like saying we should sell out of Ford, back in the 1930s when it had the number 1 selling car in the world, and they were revolutionizing manufacturing. And that's, I think, where we are. Now, I think the market has changed a lot, but we are now in a car market that is moving toward electric vehicles. There's a lot of benefits to electric vehicles. I know most of the press goes to the range issues, and you can't drive more than 300 miles without having to stop and charge it. But now they have superchargers, which in an hour you can charge up to 80% of your battery capacity. So you stop, you have lunch, you plug in, you come out of your lunch, and you get on the way. And that's improving very quickly. And so other than that, think about what an electric vehicle has inside. It's got an electric motor, which is very efficient. There's no oil, there's no radiator fluid, there's no power steering fluid per se. Everything in an electric motor is just an electric motor, and they're very, very reliable. Think about all the electric motors you have in your house. They're reliable. They last for a long time. And they're based on battery technology, and the battery technology is lithium ion, which lasts a long time as well. And so when you have to go get your car maintained every 5,000 miles to get an oil change, that's something that you don't need to do with the Tesla. When you have to go change the rear differential grease and the transmission fluid, these are things that you don't have to do with the Tesla because they have electric vehicle motors that are very efficient. First of all, they go from 0 to 60 in about 2 or 3 seconds, which is twice as fast as some of the best Porsches and BMWs and the fastest cars around, and certainly as fast in some configurations of the Tesla. So the technology is superior. It's the charging that is still the weak link, but they have this amazing charger network now that a lot of the other companies are realizing they're the standard, so they're going to have to license from Tesla. Remember what I said about that licensing thing, because that's going to be a theme here. But anyway, they've got the Model Y, which is the number 1 best-selling car in the world. And I think the Model 3 was the 3rd best-selling car in the world, or certainly the number 2 best-selling EV, something like that. But they're not a small company anymore. They're a large company with presence all around the world. There's a question people asked in a survey: how likely are you to choose the same car brand for your next car? Number 1 is Tesla. 87% said they'd buy another one. They're doing something right. If you've ever been in one, you know what I'm talking about. If you've ever sat in the full self-driving Tesla car, you know what I'm talking about. It's amazing. This is global electric vehicle sales and hybrid sales and basically all the car market up until 2023. And so you can see that there's an increase in the EV percentage. You can see that they're being adopted at an amazing rate. Now, are they going to continue to be adopted? Well, a lot of the world is mandating that electric vehicles become adopted. They're mandating that they have their fleets. These car companies have their fleets have higher and higher efficiency standards. And that's going to force adoption. It's also forcing competition. We'll talk about competition in just a second. This is the trailing 12-month global Tesla deliveries. Look at that chart. I mean, the deliveries are absolutely off, they're just amazing. Other car companies are not doing these kinds of deliveries. They're not showing these kinds of growth. They're basically flat. Ford is flat, GM is flat, Toyota is flat. Tesla is increasing. Tesla's exponential growth. Now, this is a bit hard to see, but you can see in the beginning, they introduced the Roadster, then the Model S and the Model X and the Model 3 and the Model Y. And you can see they have these S curves. The adoption shoots up. Now they've introduced the Cybertruck. So we're in the fairly early stages of the Cybertruck and the semi-truck. And I'll show you a bit about the semi-truck in just a moment. And then you can see S curves for full self-driving, which is basically late, but it is actually amazing. And I think that's what's transforming this car company into a software company, kind of like Apple, kind of like what Microsoft did. As you are a software company, you don't have to worry so much about the margins of hardware. Now you can efficiently develop software and have AI help you develop the software, and you can get exponential growth with it. Their energy company, their solar roofs, their mega packs, all those things are also accreting to earnings as well. And then they're going to be looking at introducing a $25,000 car. The question is, are they going to introduce that $25,000 car to compete on the low end of the market, or are they just going to opt into Robotaxi? We'll talk about that just a second. I think they're going to do both. But either way, I think they know what they're doing on that $25,000 car platform. Energy storage is growing at an incredible pace, even though it's small, it's only about 3 or 4% of Tesla's total amount of revenues. It's still growing at a very fast pace. And when you grow at 100% a year, it doesn't take long before all of a sudden it becomes a big revenue generator. So it's battery packs, it's the car batteries themselves. They are producing a lot of the lithium ion infrastructure and technology, mostly in the United States. So they are growing at an incredible rate. I want to just kind of back up and say, if you look at what Microsoft was and is, Microsoft all around that is software, right? Server products, Office products, Windows, gaming. There's a little bit of Xbox hardware for sure. And then now they sell Surface tablets and some other things. But almost everything on that pie chart is software. And that's why Microsoft has become one of the largest companies in the world, is because they've always been able to leverage software. You develop it, you spend money on development, and you hit a button and it updates everybody's computer. You're probably still running Microsoft Windows. I am. And if you're not running Microsoft Windows, you're running an Apple product, and they are a software company as well as a hardware company as well. And the hardware helps them deliver software in a lot of software and services in a lot of areas in their company. Apple, for example, you can look at their revenue streams and you can see, yes, they do have some hardware. They always talk about the iPhone, but if you're an Apple customer like me, you get billed all kinds of subscriptions, Apple Music, and then you get billed the Apple TV if you have that, and you got the Apple AirPods, and they got a lot of different things, streaming services, and it's a combination of the hardware gets to the software. They sell apps, and that's an amazing amount of money for them. They take 30% of all the gross on the apps. So Apple has kind of got a similar model. And so I think Tesla is moving to a software model, very quietly moving to a software model, and I'll explain that in just a second. And that is through the full self-driving component of what they do. So Elon Musk realized years ago that cars should be able to drive themselves. I agree. Why are we still driving a car after 120 years of having automobiles? We should be letting the cars drive us, right? Airplanes basically fly themselves. They have autopilots. Trains fly them, drive themselves with a guy sitting back there, and they have, an engineer, but primarily it's an autopilot. Why not cars? Well, because cars are more complicated. Right? You have to have people walking in front of them. There's rain, there's fog, there's stop signs, there's yield, there's construction. But if you have enough eyeballs, if we were all human beings and we just put our eyeballs all together and programmed a computer, and we put in every scenario that was likely to happen in a car and allowed that computer to figure it out, we would have a platform for being able to drive without human intervention. So Elon Musk said he's going to move in that direction. Some other car companies did that too, but Apple just scrapped their product. because they don't see themselves being viable. And so other companies are trying, but they are spending huge amounts of money to do it. Tesla has kind of figured it out. And if you've ever been in an FSD vehicle and you've sat there with your hands like this and your feet off the pedals and let the car drive, you're amazed. The car takes a left turn into the proper lane, puts the signal on, it stops, it goes over speed bumps properly, it stops if a pedestrian jumps out in front of the car, things like that. And it's become a much more safe platform. And just in the last month or so, Tesla released full self-driving for a trial to, let's say, approximately 1 million people, or to whoever had the car that was equipped to be able to use it. And so they have all these new eyeballs, 8 cameras all around and all the sensors inside and all that input, all coming into a central AI computer. And when that AI computer sees it, it's getting tons of data. And now it gets to reprogram all those people that are continuing to use it. And so it increases its efficiency and reliability by an incredible amount every day that's out there. And you could see full self-driving's already driven 1 billion miles. It's so much safer than humans driving it, right? So the inevitability is that it has to be approved. Because anytime there's an improvement, especially an order of magnitude improvement, the government gets behind it, approves the regulation of it. And so they did the same thing, with catalytic converters. Oh, that's better for the environment, so every car has to have a catalytic converter. Or if you know that your tail lights have 3 lights in the back, you have that one in the center. It didn't used to have the one in the center until Elizabeth Dole, who was the Department of Transportation Secretary, she put in a mandate that said it's safer to have that third light. So now every car in the United States and probably around the world has that third light. We don't think anything of it. It created safety, seatbelts, airbags. All of these things were market improvements in safety in cars. Full self-driving is no different. In fact, it's way better because it avoids accidents altogether. There are 3 layers of opportunity in the self-driving situation. The first one is just the vehicles themselves, the current fleet. The second one is Robotaxi. What could happen if there's an imagined fleet that is not even in place today, but can use full self-driving technology? And the third is licensing. We'll talk about licensing a little bit. These are the models of Tesla vehicles. Let's assume that there's 2 million eligible vehicles and 50% of those opt in. Now, the price that we're seeing now out of Tesla is that is not a $12,000 cost anymore. It's a $99 a month cost, making it very affordable, basically to have a chauffeur drive you around in your Tesla. So it's now $99 a month, and that at a 50% take rate would be about $1.2 billion in annual revenue. Now, Tesla's producing close to 2 million new vehicles per year, and that number is growing. And so presumably that software number, that full self-driving number, will also grow. And so you'll see that number grow from $99 a month. They'll probably scale it up as inflation starts to hit. But let's just assume it's at today's value. You're going to see an increase in revenue from that. And that's just being conservative. If you've ever been in one of these things, you're probably like, well, I don't think I want a car without it because it's really cool. All right, Robotaxi. So now you take this full self-driving and you put it into a car, and now you don't need to have a person sitting behind the wheel. And it's hard to believe that we are going to be sitting in cars without people that drive. But if you've been to an airport and you sit on those shuttles that go back and forth between the terminals, there's no people driving those. Those are all automated. And Robotaxi is just the next iteration of that type of technology. And so I think full self-driving is the next thing, and it's going to enable people like you and me, if we wanted to create passive income, we would buy our own fleet of, Model 2s, which I'll talk about in a second. And, it won't have a steering wheel in it, or maybe it will, but it won't have a driver that you have to pay labor to. It'll just, you'll call it up on your app. It'll show up at your house. It'll pick you up, and it'll take you to wherever you want to be. It'll drop you off, and then it'll go on and pick somebody else up. And if you wanted to own your own fleet of vehicles, you could invest in that fleet of vehicles, and it could sit there and make you money. And then you wouldn't need to own your own vehicle. You just use one of those vehicles, right? And that's what's going to happen. It's going to take car ownership into something like, a little bit less important, because you're always going to have somebody driving you around, and it's going to be a Tesla, and it's going to be available everywhere. Now, not the next year, but that's where it's going. Tesla could be its own fleet operator, or they could license the technology to other companies, which I believe they're going to do, and I'll talk about that in a second. The date of release on this Robotaxi, because they're feeling very confident in full self-driving, is August 8th. What are they going to announce? I don't know. I think it's going to be a good announcement. I think Elon Musk has been building to this for 10 years. And this is his announcement. This is where it comes out. And I think he started in some small towns. You move to some big towns like Austin, where they have a factory, and then it grows and it grows and it grows. And so I think that could be on the Model 2. So they could build these fleets on the Model 2, call them robotaxis. And now either you're going to have Model 2s that are out there. We'll talk in a second about Model 2s that you and I could buy for 25,000. That's the low end of the car market these days. Or those will be robotaxis, or both. So when we talk about the fleet of robotaxis, we're basically going to replace that big old Crown Victoria kind of car there on the left with the driver, with these driverless things on the right that are going to be equipped with software that has 8 cameras and all these sensors around it that basically can drive you anywhere you want and do it in probably a lower price way and in a much safer manner, right? If you've ever been in a New York City taxi, you know what I'm talking about when it comes to safety. And if you think about Uber, remember when Uber first came out and we thought, oh, nobody will ever replace the taxis. And all of a sudden now we don't really go to bigger cities without using Uber. And so Uber, look at that revenue stream. Uber grew and is pretty mature now, but still is growing its revenues. Think that the robotaxi is basically Uber without the labor costs. I think Uber is threatened here, which means I think Uber will partner with Tesla for these robotaxis for a portion of their fleet. And the third part is licensing. So Tesla has been developing this artificial intelligence for years and years, this full self-driving. It's taking in billions and quadrillions of bits of data to use to program all the decisions that the full self-driving makes. Nobody else has that amount of data. They've been collecting it from beta users and simulated users and now all these trial users, and they're creating gigantic amounts of data from which to base the full self-driving on. So it perpetuates itself. In fact, they released 12.3.3 a couple of months ago, and they just put in 12.3.4, which the users are saying is incredibly better, right? Just the little quirks are way off there because so many people have been using the free self-driving trial. Licensing is something that I think is going to be a big part of what their revenue is. In fact, there's a rumor that Ford is going to license their full self technology because Ford is 10 years behind, or at least 5 years behind. They're going to miss out on all of that opportunity. And while Ford was going to be in the EV business, they're scaling back. While Mercedes was going to be the big EV player, they're scaling back. Volvo, all these other car companies are scaling back because they can't compete with the manufacturing prowess and the full self-driving prowess of Tesla. So there's a big opportunity for licensing that will come there as well. Manufacturing capacity, the company continues to put in manufacturing around the world. They obviously have a Chinese manufacturer, the US manufacturer, Germany. They're talking about a full vertically integrated spectrum in India, Mexico for the American markets. And around the world, they're continuing to grow their footprint because they've got manufacturing down. If you look at that picture there with the robotics, there are not a lot of people that work on the floor anymore. It's all taken over by robotics. And I'm not even talking about the Optimus robot, which is a whole different thing. It's a consumer robot. It's a robot that can help in manufacturing. I'm not going to even get into that and the potential for that because I don't see that on the horizon for at least another couple of years. But I think it's coming as well. And Tesla has a robot called Optimus that could revolutionize things. You've seen some of these humanoid robots. Let's talk a bit about the pros of Tesla. First of all, it's not just EVs. There's other things, right? There's energy storage. There's full self-driving, which is basically software revenues. There's robotaxis. There's the Model 2 tie-in to those robotaxis. There's the Cybertruck, which I'll get into in just a second, the semi-truck, and then the robotics I just mentioned, and then Elon Musk. He's a visionary. He's probably the greatest inventor and visionary of our time. He does some outlandish things. He lands rockets on his own platforms and he reuses them over and over again. It's just amazing what this man has been able to come up with. And I think he's going to continue to innovate and continue to be a good operator of companies. The cons. Well, there is a slight demand slowdown in EVs right now. In the last quarter, and this is the reason the stock is down, the company didn't produce as many cars as the Wall Street has expected. Still produced a lot of cars, but not as many. Well, why? Well, a lot of the early adopters that bought the EVs early on because it was a cool technology are in. Okay, not all of them. but they're in. That doesn't mean late adopters aren't in. That just means the earlier ones out of the way. So you've got to really develop the market. High interest rates are preventing people from going out and buying new cars. They're hanging on to the ones they have. They don't want to get a new car payment if they don't have to. And so that's keeping people out. Inflation, the trouble people are having, making some ends meet, especially in the higher end vehicles, could be a problem and is a little bit of a problem. They are probably going to be laying people off because of some of these demand issues. And there is competition. There are companies like BYD, a Chinese manufacturer, that is coming for them, but they're on the low end. BYD has also said that they're not going to compete in the United States. But as I was traveling abroad this year, I saw a lot of BYD cars, and they're pretty nice. So that's certainly an issue, is competition from the legacy manufacturers. Although there's a company out there, I think it's called Rivian, which has a pretty cool truck. But every time Rivian sells one of them, they lose $327,000 or some number like that. So they still haven't gotten the manufacturing costs down at scale to be able to compete with the Cybertruck, which I'll just talk about in just a second. Margin reduction. So Tesla, because Elon Musk is an operator that believes in driving his company with supply and demand, he lowers his prices when there's lower demand. So, or when he gets more supply. So when he has a few extra Teslas sitting around in inventory that are unsold, he starts to lower the price, and that increases demand. And that creates a margin problem, which is why the stock is down in Q1 2024, because people are seeing margin compression at the company. Now, the company is not like some of these other companies that have huge amounts of debt. Their competitors, they have very, very little debt, but they still have a margin compression issue, and stocks basically trade on earnings and higher margins, growing margins, and Tesla's not showing that right now. I think they will with software, but time will tell. And then Elon Musk he bought Twitter, and he's the richest guy in the world, and people are shooting against him because maybe he's not politically aligned properly, says what's on his mind, things like that. Or maybe he's spread too thin. There's a lot of fear, uncertainty, and doubt around Elon Musk as well. So that you have to put in the con category as well. Now, let's talk about labor, because labor is a big component of what Tesla does. Workers are expensive, right? So you're going to see regular layoffs, and regular layoffs make sense because if you have high labor costs and you can lay off those people, then you're going to save money, lowering your manufacturing costs, right? And replacing them with robotics, right? That's a big thing too. Musk is basically, like I said, a supply and demand driven CEO. And so he wants to be able to cut costs, and he's always innovating and engineering lower costs. You're seeing lower costs every time that Tesla puts in a factory. That's increasing margins over time, but lowering competition's ability to be able to compete, because they've got these old ways of making cars. Tesla is gearing up for making cars in a very efficient way. Just for perspective, you're going to be seeing layoffs in Tesla, but they've done this before. And you've seen the stock chart now to know that, that's been in good years and bad years. They laid off 2% of the workforce in 2017, the next year 9%, the next year 7%. And then in 2022, they laid off 10% of their workforce. And then every 2 to 3 years, Tesla basically cuts its staff. So it's just kind of the way that Elon Musk operates, and he's always trimming. He did it at X, formerly Twitter. And when he did it, everybody said he's going to go out of business. You're getting rid of 75% of your people, and he's doing just fine. In fact, Twitter and X.com is doing better than it's ever done, at least as far as views on the platform. Let's just take a look here at what is going on in the S-curve adoption at Tesla. So they're starting with EVs. We're still in that EV period right now, but it's going to move to full self-driving. And if you thought the EV expansion over the last 5 to 10 years has been amazing, wait until you see the software uptake from FSD and Robotaxi. But energy is also quietly creeping up. This guy is building this amazing energy company, and we are moving to a more efficient and energy storage-laden economy. They're in the thick of it, and he believes that AI robots are going to be the biggest business of all. And so he's got some pretty good humanoid robots that we'll see when those come out, if he's right. So that's kind of the way I see the next 10 years of Tesla. Now, the question is, can we hang in there long enough to enjoy that? Let's talk about the Cybertruck. So the Cybertruck is this funky looking thing that's based on the DeLorean. It's got a lot of angles, but it's incredibly fast, and it's incredibly powerful, and it's incredibly cool, say a lot of people. At first, I thought this was an ugly truck, but I kind of think it's really cool. And I've got one on order. It's going to probably take me 2 years before I get it because he's got 2 million on back order, right? There's 2 million people want one of these trucks. And that's pretty cool when you can get that kind of a demand built up for a product that you release. He's got a compact car called the Model 2. And the Model 2 is this little $25,000 compact car that's going to be, I think the rumor I heard, it's going to be 40% cheaper to manufacture than any other kind of a compact car in that class. And so there's going to be an advantage in that. But that's also going to be the platform for the Robotaxi. They have the semi-truck. And the semi-truck has been delivered to Pepsi, and it's apparently doing very well. And if you look at the inside of the truck, you see amazing things in it. It's very futuristic, and it will also take advantage of being able to drive itself. Now, think about a truck driver that has all that weight behind him that's making mistakes and getting in accidents. This is going to be full self-driving, and so presumably you'll be able to probably have a truck driver in there, but he can go a lot longer distances. And we talked about energy storage. Now I want to transition to Cathie Wood because Cathie Wood is the leading name, certainly one of the leading names in research when it comes to Tesla. She's also a leading name in a lot of other things like Bitcoin and Coinbase and several of the other innovative companies that are out there. So they basically at ARK Invest make their bacon on doing really in-depth research and putting that research to work in their fund.
When you have the GMs and the Fords and everybody else saying we can't even make these things profitably to begin with, let alone to do it at half the price.
And just think about this. Tesla's doing it profitably and cutting prices in the process. It's pretty phenomenal.
And you could say what you want, but the company has done well over time. It's also had its setbacks, but she puts a lot of time into research. And I think, when you study fundamentals of companies, I think eventually it pays off if you got the right companies. And I believe if you stay in the high cap popular companies like Tesla, Apple, Microsoft, those are the companies that continue to do well. And she's a huge investor in Tesla. In fact, that is her largest holding in her ARK Invest Innovation Fund. But let's take some of their research and look at it. ARK's simulation outputs are, showing what the expected price per share are. Their expected value is a $2,000 share price in 3 years, 2027. Are they going to be right or wrong? Who knows? But sometimes these things creep up on you, and all of a sudden we'll be looking at a 10x share price in 3 years. It's happened before in Tesla's history. It's happened before in Apple's history. Why not happen again? Their stock price is $2,000. Their bear case scenario is it's $1,400. Now, the stock is worth $170 or something like that right now. And so they say there's a 25% probability that it could be worth $1,400 per share. Well, that's still almost a 10x. It's, like an 8x where it is today. And so that's pretty good. Or if they're wrong on the other side, they give themselves a 25% probability that it could overshoot that based on all of the things that I just discussed, especially full self-driving.
We want Tesla to scale its units because each one of them now represents the potential for a robotaxi and a robotaxi fleet. Now, Elon says it's possible that he could launch that fleet this year. We think it's more like last year. But the robotaxi fleet is really going to be, or the robotaxi service is going to be, from a margin point of view, more like a SaaS business. And so we think that it's very smart to maximize units because they have so much option value now.
Yeah. I mean, but we've been hearing about the robotaxi fleet for some time. There's a lot of regulatory barriers to all of that, and certainly technological barriers involved too. So how soon can we actually see that realized? And given the fact that you tweeted earlier today that you've got a new valuation assessment of Tesla coming out, how does that fit into your price target for the stock going forward?
The price target for our stock, and I think it's just hitting now, for 2027, because we do have a 5-year investment time horizon, is our expected value is roughly $2,000, and that's within a range of $1,400 to $2,500, our bear and bull case. Now, just Morgan, on the regulatory side, I actually think regulations are working in Tesla's favor. For, I think, roughly 3 decades, the number of auto fatalities in the United States fell to the low 30,000 range per year. And they've turned around in the last 5 years and moved up to 45,000 plus. And I think the pressure is on the National Highway and Transportation Safety Association to change something. So it is looking carefully at Tesla's data. And during Investor Day, Tesla released some data that we don't think many people paid enough attention to. The most important one is that with full self-driving, a Tesla vehicle gets into an accident every 3.2 million miles. And that compares to 1 every 500,000 miles for the average car on the road.
Okay, so Cathie, hold on. Good afternoon. It's John Ford. I just want to clarify. Did you say a $2,000 per share price target? Tesla right now is under 200 a share. So even if you were to 10x that would be an over $5 trillion market cap. Is that what you're saying?
That is what we're saying. We think that the robotaxi opportunity globally will deliver $8 to $10 trillion in revenue by 2030. And is one of the most important investment opportunities of our lifetimes.
Okay.
And I think one of the reasons for that is it is going to save lives. 80 to 90% of auto fatalities and auto accidents are caused by human error. And autonomous driving is going to take away the human error, we believe.
I want to read this to you because it's interesting. Their prospective robotaxi business line is a key driver, contributing 67% of expected enterprise value and 64% of EBITDA in 2027. That's earnings. Across our simulation set, electric vehicles account for 47% of revenues in 2027 at substantially lower margins than robotaxi revenue. The chart below breaks down the attributable revenue, EBITDA, and value by business line. So you can look at those charts and you can see it's transitioning from a electric vehicle company to a robotaxi company, right? You could see it's got some energy storage there, right? And then you can see that there's, human-driven ride hail. Let's look at the next one, and that is cars sold. You can see 2022 actual is 1.3 million cars sold. They believe their bear case scenario is 10.3 million in just 3 years. They're 2 million now. And maybe in a bullish case, they're making 20 million cars in 3 years. The bottom line is those are all pretty good numbers, right? And if your average selling price is 53,000 now, they believe that, in a bear case scenario, they're going to have to lower those prices. In a bull case scenario, they're going to be selling more cars, but at a lower price. And that's still going to lead to an incredible amount of EV revenue. Anyway, I won't go through all of these, but you'll see that those numbers are absolutely fantastic, right? All leading to between a $1,400 and a $2,500 per share price, 2,000 being the median and the really expected value. Even if it's half right, it's still almost a 10x from here. Adjusted million miles per crash on streets. Remember how I was telling you that their cars are much safer on full self-driving? You can see Tesla in full self-driving in 2023 did 3.2 million miles before they had a crash. But a manually driven Tesla is 700,000 miles before there's a crash. So almost 5 times better at safety. The national average, without talking about Tesla, is we have an accident about every, 170,000 miles, I guess. It's an incredible, order of magnitude safer. And so I believe that has to be approved. So what can we expect from Tesla going forward? Well, we're going to see lots of press. Mostly it's going to be bad news because I know Wall Street, and Wall Street tries to get you out of your stock if you can't handle it anymore. I've seen this happen in Tesla and other stocks over and over again. So you're going to see layoffs, margins, people talking about bad news in unit sales. There'll be a lot of bad news. Elon Musk is a bad guy, all these things. You're going to also see some good news. Full self-driving, Robotaxi coming this year, Model 2 release, which is either going to be the self-driving platform, or it's going to be the robotaxi, or it's going to be both, or it's just going to be the lower compact car. Factories opening, good and bad news, probably is priced in by now. So if we haven't sold by now, it's probably not the time to get out, because it's probably going to capitulate and go the other way. Who knows? I've certainly not been able to time Tesla in the past. I just know over time, I think I've got the right story. And you're going to see lots of volatility in the stock because of the news, because of the earnings, because of the guy is one of the richest people in the world, that kind of thing. So that's what we can see going forward. So listen, I hope you enjoyed the unboxing of what I think are the relevant points of Tesla. I think there's a good case to be made that the stock is actually going through a change right now and turning into a software company. The vision that Elon Musk has always had is to take the hardware, the cars, continue to make those and revolutionize the economy with those cars, but also start to shift into a software mode. So I hope I was able to paint that picture. Again, I know it's been tough. Sometimes the toughest investments are the ones that pay off the best. I don't know for sure any of the stuff that I just said. I can just tell you that all of the things that I mentioned are based on probabilities, and probabilities put the odds on your side. And I think if time has anything to do with it, time also puts the odds on your side. And if the company continues to execute, and we know they've had some issues in the market. We know they've had some issues maybe with some choices as a company, but I think those are fairly small issues. Some people said maybe they should advertise. Some people say, maybe they should, shouldn't have dropped their prices and kept their margins higher. There's a lot of second guessing that happens, not just with the stock, but with the company as well. And so I know that happens. So listen, I'm gonna wrap up here and say thank you for being here. And if you haven't subscribed to the channel, go ahead. This is an opportunity to do that. And you can help the algorithm, help me, help other people get served up information like this. Hit the like button, the subscribe button, the notification bell. And by the way, I have a newsletter called Insider Tips, which if you want to go to cashflowmachine.io/tips, we'll get you hooked up with that free newsletter. By the way, the description is in the bottom. So thanks again for being here. I'll see you on the next video.